Up, everybody? You know what time it is. It's 10:30 a.m. Eastern on a Monday morning, which means it's time for futures trading with NinjaTrader. The market is doing all sorts of funky things today, but I've got Jim Cagnina here to help talk us through A, how to trade, but also B, what to watch out for, and C, how to position yourself for big catalysts coming down the pipeline. So we got a lot to cover. Futures markets doing some weird things here. We'll get to it right now. Here we go. It is time for futures trading with NinjaTrader. Jim Cagnina, how was your weekend, sir? How was your week as well? Your last week?
Well, last week was definitely exciting. We had a lot of volatility, a lot of action across all the different CME Group asset classes.
Oh yeah,
I focused on 5 of them, and it was good. Weekend was awesome. Great Super Bowl game.
I can imagine you had a busy week. Let's bring up your charts here right now, and I would love if you could just walk us through how you, like, your thought process as the week progressed, because we had a number of things. We basically have 2 macro storylines here. We have the Russia storyline, we have the Fed storyline, and they both kind of unfolded at the same time and are still unfolding at the same time. So I would love if you could just pull up the S&P futures, and I would love if you could just walk us through just your thought process as the week went on.
Yeah, for sure. I have a daily chart up right now, and this is, believe it or not, the S&P is like the most stable stock index future in terms of volatility. But look at the chart. I mean, it's crazy. So we have a situation where there's a lot of uncertainty. This market doesn't like uncertainty, right? Uncertainty with respect to the 2 big giant gorillas in the room right now is inflation,
right,
and the Ukraine geopolitical situation right now. The market doesn't like it. It's selling off again today, even though supposedly Putin suggested that there might be a diplomatic path out of this dilemma, which should be bullish, but it's not. So we have this systematic risk going across all of the markets because of this tension right now and the uncertainty associated with it. But the really neat thing about technical analysis is you could use your technical analysis to give you some trade ideas, right? We have this Fibonacci retracement that I drew right here on the S&P. And literally, we had my icicle wicks down here, and we had a rally back up early February, and we touched the 61.8% retracement. It's almost magical. I don't know why it works, but it seems, at least in my opinion, I'm respecting the fib. And then we kind of broke all the way back down on the bad news this morning to the 23.6. We touched it and we bounced back up. So right now, though, it's looking pretty negative here in the stock index futures, particularly these ones. I would probably not be looking for places to buy right now.
Jim, one question, I'm not sure I've ever asked you this, but we've spoken obviously at length. One of the advantages of the futures market is that it's almost 24 hours a day. But like, how much attention are you really paying to futures, Sunday night, Monday morning, 6 a.m., like in the off hours? I mean, are you watching it like a hawk? Do certain times of day indicate certain things later? Do you put more weight into certain hours?
Yeah, that's a great observation. Great question. At the end of the day, I look at a couple of different things. There's this extra hour that the futures market trades after the regular trading hours close in New York. And so you could take a look at that extra hour and see what the market's doing. Is continuation selling going on, which is going to suggest continuation selling going into the overnight? Or is there some pullback? Are there buyers coming back in because all of the longs just got squoze out, and then which would make the evening or the next day more likely to either be sideways or back up? So that extra hour I definitely look at. And then early morning, I'm up early morning looking at these charts. I want to see what European session did, right? What happened when when the DAX and the Eurostoxx 50 opened up at the Eurex exchange in Frankfurt. And then I want to see what happens in London also. And that's kind of going to give me a pulse to see if there's any dominance candles. When we look at the daily chart today, it's a freaky looking picture, and I'll explain what I mean by that.
Yeah, please.
Well, here, you want me to cruise through the market? You want me to just talk
Well, all right, that's a good idea. Let's cruise through the markets and let's come back to that though.
Okay, so let's do that. So let's just really quickly, again, micro NASDAQ, same kind of structural formation, systematic risk, selling off right now. It's a little bit weaker, the 23% retracement, we're trading below it, and this is actually going to be my area of resistance. We'll see if we can ever get back up over there. The Russell 2000, and I'm going to go quickly here, is relatively stable compared to the other stock index futures. The pattern's still similar, but we don't have these really big looking, scary looking candles either up or down. It's a little bit more a little more in step. It's a little more normalized. The Dow Jones futures was the strongest complex for a while, looking really weak. These are really big red candles in the Dow Jones. And this selling is going to continue, in my opinion, here. I would not be looking for a place to buy right now as we approach this 23.6. So keep that in mind. And also these icicle wicks down here, and that's a term of art I just coined, by the way, often act like a magnet, even temporarily. So I'm looking for downside there. Gold is the big one, man. Look at this. This is risk on. Look at this gold market. 1871 and climbing. Right. This is where you go when you're scared of a geopolitical disaster. You're buying gold. And this is a really clear and present chart here. It's not treasury bonds anymore. Used to be U.S. treasuries, but treasuries are still negative yields. So forget about that. We're going into gold. And look at that market. It's really, really strong. And it's in the opposite direction of Bitcoin. Let me just jump over to Bitcoin so you can see that real fast. Bitcoin's struggling in between step 1 and step 2 right now. Right at that 23%. And again, it's not railing. It's not going the same way as gold. It's going the opposite way. So this is not a flight to quality instrument, in my opinion.
Yeah, no, I was going to say we've seen a lot of that, and I have a hard time remembering it a lot of times. But yeah, Bitcoin is treated as a risk-on asset. So when you see tech stocks sell off, Bitcoin goes with it, even though what they've tried to say over the years is that Bitcoin is an inflation hedge. It is a hedge against the dollar, but it doesn't act as one. Although, frankly, now that there's gold, the chart that you showed notwithstanding, frankly, gold is acting like gold right now, but it's not always the case anyway. But
yeah, and to go back to gold, this is Spencer. This is fear factor right here. This is what it is, in my opinion. I guess it's not. This isn't an inflation rally. This isn't a relationship between. This is a fear factor move. So anyway, just real quick.
Jamie A asked if that was paper gold. No, that's like gold futures. That's like gold, the commodity gold. That's what that is. That's not like
absolutely. This is CME Group gold futures. Pretty liquid, very popular market with both institutions, commercial hedgers, and retail traders. It's very tradable. It's a nice market.
All right, let's keep on rolling here.
Okay, crude oil, I'm bullish. Even though U.S. rig oil count went up 19 last week, which is the biggest weekly increase in 4 years for new rigs coming on in the U.S. But the Ukraine shadow is over our heads, and this is simply a supply market right now. And I'm bullish here, and you can see we're approaching my 161.8 fib, $97.12 target for my WTI West Texas Intermediary crude futures contract. My opinion, I'm sticking with it. I think we're going to get there.
Okay, yeah. So it seems like for the moment, I mean, purely a non-equities kind of a focus here. You're looking at gold. You're looking at crude oil. Let's keep on going here. We got a couple more markets I want to look at.
All right, Treasury bonds. Again, I think really what the Fed speaker even talked about this morning, Ballard, is they want that yield curve to hit slope upward, which means 30-year bond prices have to go down in relationship to 2-year notes, 5-year, 3-year notes, 5-year notes, Fed funds, those shorter duration things. So they want that to be steeper to suggest that the economy is going to be okay and not into recession instead of a flat curve. And so, and again, this is built into this 30-year bond market. I mean, looking for places to sell. I mean, we're not done selling off in the 30-year bond market. A couple other kind of interesting ones. Dollar index is kind of fighting its way back up. And again, this is as different government central banks kind of formalize or change or modify their approach to interest rates and tapering and asset purchases and all that stuff. This is going to toggle up and down. Right now, I really see an equilibrium up here at the 23.6% retracement, 96.44, 96.45. That's my target for kind of an equilibrium level for the U.S. dollar index going into the next quarter. And I have two more kind of specialty markets we haven't talked about, Spencer. Copper. I mean, this is the thing, right? Copper is an important component in everything, right? I mean, everything from manufacturing to component parts to supply chain issues. So I want to keep an eye on this copper and make sure that we could stay within a reasonable range here between the 61.8% and the 23.6%. It's going to give me a gauge on the future with respect to how our economy is going to react with manufacturing and supply chain and all that stuff. So I'm interested in copper futures. It is tradable on the CME Group website.
Yeah,
sure.
We must really be. We must be really in it now. If you're talking about copper, you and I never talked about copper before, I don't think. So we mostly stick with the mainstream equities and the top gold and Bitcoin and crude. But the fact that you're looking at copper must mean that we are really in a risk off market here.
Yeah. So, and I got another one I'm going to throw out at you. Lumber. I got lumber up here. Lumber futures.
Wait,
now this is
remind me what the symbol is. I don't remember.
Yeah. Well, it's LB, and then we're in the March 2022 contract. LB, and this is my chart's kind of naked here. I didn't have time to kind of do too much with it, but I wanted to point out these little dashes here that you see. These are daily candles, right? When you see a dash like that, that means lock limit up, lock limit up. Lock limit up.
Explain that.
So there's ranges in which a market can go before trading is halted, right? And it's called lock limit up or lock limit down. And in a lot of the commodity markets, you have this limit associated with it, so it doesn't run away. And what happens, though, I mean, as an example, right here, let me get my crosshairs out, just make it easier. Right here, for instance, if you were short here. The next session we opened up lock limit up there, which means you couldn't get out, right? You couldn't get out. And so you're stuck being short here because there's no buyers, stuck being short, stuck being short, stuck being short, stuck being short. So when you're caught in a lock limit market like that, you're in big trouble. Finally, we had sellers come in here and buyers and sellers agree to do a deal. And now we're kind of back to a normal range. But lumber is a thing, right? Remember, housing is all about it, and among other things. So that's another really important. You can look at it where it was in the middle of COVID. We were way north of here. So these are record lumber prices, and it reflects on how strong or weak the economy is going to be, for sure. I mean, housing prices are part of it. So I got lumber on my radar screen too.
All right, we are really going off the board here. We're talking copper, we're talking lumber. Someone in the chat asked, or they didn't ask, they just mentioned, was it Brent oil, which you always look at light sweet crude, but they're pretty correlated, no?
For sure they are. It's just
it was Parte Bonza looked at light sweet crude, which is what we've looked at, light sweet crude.
Yeah, so we looked at the WTI, West Texas Intermediary light sweet crude, which is delivered in Cushing, Oklahoma. It's called sweet crude based on its composition and its API, which is its density. It's very attractive because it's easier to distill. It's easier to convert to gasoline and other low sulfur fuels. Brent crude, which is North Sea, is similar. It's also sweet, But because of where it's at, it's usually trading at a couple $1 premium over light sweet. And then the third one is Dubai, which is a sour, right? It's harder to distill, for the distillery process to convert. But that's the third benchmark. So I focus on the WTI here at the CME.
Yeah. I'm sorry, Jim. Can you go back to that lumber chart for a second? I just wanted to let that sink in for a minute, because everybody watched that the prices of lumber go crazy. What was it, like a year ago?
Here, let me
it's hard to see. So this is the continuous front month lumber futures chart, right?
Correct.
Okay. So and that all-time high was what, January, February of last year?
This was May 10th, 2021.
Okay. So May of last year. So we had a huge run up, and all over the headlines, huge run down. But now here we are within shouting distance again of the, I mean, we're not quite there, but we're getting in the neighborhood.
Yeah. Right. And I'm far from a lumber expert, and I don't know how much this had to do with the Canadian trucker blockade.
Maybe. I don't know.
Yeah, because we do get a lot of U.S. anyway gets a lot of lumber from.
But if that's the case, if that is the case, Jim, then theoretically this whole move should be short-lived, right?
You would think, and we did have a pretty decent, and I don't know why. I haven't done that much research, because I literally saw this on Friday. I'm like, oh, we got to start looking at this. But we did have a big sell-off. We're kind of fighting our way back up slowly here, but let me just kind of open this up a little bit more so we can see the candles a little better. So we'll see. I mean, is this a double top, Spencer? Are we going to break back down? Are we swing? Is this going to be another swing A, B, C back down to D? I don't know. But this is a commodity, so it is a supply and demand marketplace for sure, of a physical thing.
The obvious trend here, right, is, and this is again not super intuitive, but like commodities are all ripping and the equities are all not. Mostly, most of them are not. Right? You got every major index except for the Russell is down today, and even the Nasdaq is up, but only by a smidgen. And they seem very unsure of themselves. But like the commodities, they seem pretty confident in themselves. They're just keep on keeping on.
Yeah. And remember though too that you need energy for everything, right? To harvest crops, to transport them. Everything is associated with this energy market, pretty much, that affects our daily lives, including the traditional commodities. I mean, cotton, coffee, cocoa, sugar, corn, wheat, oats, soybeans. So yeah, for sure. And that's where we're seeing this inflation number. Just, let's go buy some eggs at the grocery store, and it is substantively different on a relative basis.
Yeah. Okay, so let's go back to like the S&P futures here, because that is the main market that we look at. So we had Bullard on CNBC this morning. A lot of hype went into that, and I think it deservedly so, because he was the guy that moved the markets last week. So that interview deserved the hype. I don't know if he said anything new. I don't think he did. But regardless, we had a big reversal this morning. That was off of a Russia headline. That was giving back a large chunk of those gains from a few hours ago now. So from your point of view, Jim, you're just sticking with the bearish thesis here.
Well, I am. However, the million-dollar question is, are we oversold? And what's going to be the trigger to convince the market that we're oversold, and we should kind of, start, for prices to start appreciating with respect to stock index futures and individual components. So that's something I want to think about. And I really think the last leg down was completely systematic risk related to Ukraine. When you look at the Fed funds tool, which I don't have that up right, I do have that up right now. You could see all these interest rate hikes here. This is a projection of interest rate hikes on all the different meetings. This kind of information is assimilated in the market in a really efficient way over a longer period of time. And so the more concrete information we get from the Fed, then it's even we could deal with the bad news. It's the unsystematic. So if you look at this morning's action, Europe, huge sell-off, serious concerns about what's going on in the Ukraine, and you could even see the DAX and the Eurostock are down big time. But then after Putin supposedly said, around 7:30 this morning, hey, all right, we'll talk some more, things rallied back up. So I really think if this situation gets settled in a reasonable basis, we will see stock index futures kind of work their way back up.
Okay, so aside from that unknown, and aside from the unknown of the Fed, because there is a meeting today, aside from those two massive unknowns, what else do we need to be paying attention to out here? Things that can potentially move the market one way or the other.
Well, I mean, we talked about systematic risk. There are unsystematic risk, right? So, things like earnings, things like on the NASDAQ, Musk saying something crazy or revealing something that he probably shouldn't. Those kind of things are always there, but I just think this is dominated by these two things. The other thing that's really important, I think, this is my opinion, but the Fed, FOMC members and the bank presidents that aren't FOMC members, they're independent kind of, right? So the Fed literally votes on things. FOMC votes on things, and there's people that dissent within that group. So when you have these speakers running around, you're going to have some conflict sometimes between points of view between different Fed speakers. And I think that's really important because one guy says something or one girl says something, and it moves the market one way, and then somebody else says something else, it moves the market the other way. That's really where my focus is. What are these Fed folks saying? What's going to be the likely consensus with respect to tapering and reducing the balance sheet? Those are the two big things.
All right. When you and I were talking before, Jim, you said that this tomorrow is all hands on deck. I think that's tied to your tip of the week, correct?
It is.
All right. Let's go into the tip of the week right now.
So I'm sorry. Tomorrow, I think one of the things I'm back here, guys. I don't have a fancy spreadsheet today.
Okay.
I'm going to tell you that right now for the tip of the week. No fancy spreadsheet. But tomorrow, producer price index is going to be released. I'm going to just pull it over here. I'm going to use my Econo Day cheat sheet here. And this is tomorrow. Bureau of Labor Statistics. Anything remotely inflation oriented is going to be on people's radar screens. This does have a red star, which means it's important. I think it's going to be more important tomorrow morning than any other time in recent history. So keep that in mind. Month over month is the number I'm really worried about. Prior it was 0.2%. Consensus is going to be 0.5% for tomorrow, and the range is 0.1 to 0.7. So let's see what that comes in tomorrow, and this could actually be a market mover. So my tip is be aware that this is coming 8:30 Eastern time tomorrow.
8:30 Eastern, PPI, producer price index, oftentimes used as an indicator for CPI, even though the data comes later. Theoretically, the producers are paying more for stuff. They're going to pass it down to the consumers. So we already got CPI last week. That came in hot. Does PPI also come in hot? I guess we'll find out. So why does that mean all hands on deck?
Because I think the market's really looking at these two things, right? Ukraine and inflation. And this is another piece of the inflation puzzle. And, I think traders in the market are assuming that the Fed takes these numbers into consideration in its calculus as how to proceed at the next meeting, and not just with interest rate hikes, but with respect to the balance sheet. I think so. That's why it's important in my mind, and I want to pay attention to it. It could move things.
Okay, all right. So, I mean, what else do you want to say about just where things are right now? And by the way, if you have any questions for Jim about futures trading, anything about it, whether it's technical, whether it's logistical, Jim is your guy. There's a reason that we do this show with NinjaTrader is because they are a platform that is ideal for futures trading. So Jim is your guy to ask your question. So ask away. But Jim, is there anything else that's sort of on your radar here? I don't want to say it's quiet out there, but it does seem like not a lot is happening at the moment. We're trying to everyone is sort of sitting on the edge of their seat waiting for something to happen, waiting for the next headline to hit, basically.
Yeah, and if you look at, today the ES is down 20, which in an ordinary environment would be like really bad. But in this environment, it's like, oh, it's only down 20. NASDAQ's up 55. Big deal. So one of the thing that I'm suggesting to a lot of traders, the CME Group has this thing called the micro futures contracts, right? Think fractional shares. They're smaller size contracts. And what it does is it gives you the ability to play the whole range with relatively less risk than if you were doing it with a large size contract. So as an example, you could scale in, but I have a micro NASDAQ chart up here right now. And you can see I have an order to buy a contract way down here, right? 196, 14,196. Market's trading way up here. But look at how big these candles are. It's not unrealistic to suggest we can get there, right? So what I'm trying to tell folks is, depending on your account size and your trading methodology and your objectives, maybe being really patient and considering the whole daily range for your entries and exits, you might be able to pull it off better with a micro futures contract.
Okay. That's always a good tip because less capital, right? Bottom line. Here's a question from Jamie A. Is there a way to trade the VIX via futures? Yeah, there is, Jamie.
Yeah, for sure. There it is at the very, very bottom of my quote board. VIX is, it's very tradable. I'm fascinated with the VIX. I really am. We're at 30.02, was up to 66, widely followed, very popular. You could trade it for sure in a futures contract, and it's available. It's not my main market. It's a little bit perplexing to me. But it's very popular, and it's certainly popular with respect to technical analysis, having that on your radar screen.
Can you pull up a chart of soybeans real quick? I think it's, what is it, ZS, I think.
Yeah, I'll pull up the quote. And what I'm going to do is I'm just going to link my charts here because we'll make it super easy. There it is. There's a soybean chart right there.
This is
the date 10 minutes daily.
10 minutes. Okay.
Yeah, we can go.
I was looking at the daily because I thought soybeans were also running. I think everything is running.
Yeah, it is. Daily chart. Remember, in any given day, daily chart could be an opposite of what's going on in a 10-minute chart. But let's do the same thing here. We'll just link them up. And this is a soybean chart right here.
Wow.
And you see there's a run-up. You are right.
Wow. Commodities.
No, and again, these are very tradable. Folks are kind of focusing on the E-mini S&P, and I know I focus on it, but depending on your cup of tea, man, the future CME Group futures are awesome. But yeah, this is looking pretty bullish right now. Just saying.
Man, I feel like every commodity chart looks like that right now. They don't all, obviously, but a lot of them still. And then just sorry, I got distracted there for a minute. But just to go back to that VIX thing for a second, do you have any insight there, Jim, as far as how that market behaves at all around certain events? Or do you have experience with it?
With the VIX, you mean?
Yeah.
Not my cup of tea, Spencer. Yeah. I don't follow it as a correlated market. I use it as a gauge of volatility, as everybody does. And this is another good example of why maybe you want to focus on a micro contract instead of a big contract when the VIX is at 30 or above, right? it's telling you something. It's telling you that there's more risk exposure specifically for the stock index futures, and then maybe you want to kind of slow your roll, pace your entries further apart, scale in with micro. That's how I look at it. I'm not like an analyst of that market in particular.
Who asked? Msu Camaro, I hope I got that right, asked about, I think you asked about historical PPI data. I'm going to drop a link where you can see some historical PPI data in the chat right there. I see a few other questions, but they're not like futures specific. Jim can't really speak to the QQQs. Well, he can speak to the NASDAQ, which is the same thing. So I guess he could. JB wants to know if you think the Qs will hit 400. I don't know what the NASDAQ futures equivalent is of that. Maybe for
I don't know the pricing correlation right now between, because the futures market right now is trading, at 14 7 27, that black number right there. But the answer is it could hit anything. It's very volatile.
Here's an interesting question from Zen Bullish. Do you think that, and he's referring to a couple ETFs here, but the VXX, which is just a VIX thing, or the DXY, which is the US dollar, do you think those indicators, those are good indicators of the direction of the overall market?
No. I mean, the dollar index, the dollar index is a tug of war between interest rates, basically between two countries. Well, more than two countries, because it's an index, right? So as that juggling act occurs between, let's say, European Central Bank or Bank of England in the U.S., Bank of Japan, that's how that dollar index is adjusted, right? More so than not. There's other factors. But it doesn't necessarily it's not necessarily an indication of where things are going. Even when you think about commodity prices priced in U.S. dollars, that relationship is going to have a factor on it. But those are supply and demand markets more so than not. And then the VIX, with respect to any kind of VIX related thing, it's a gauge of volatility, right? It's a gauge of volatility, and volatility could be on the upside or the downside. Even though our mental bias is, let's focus on the downside. That's when the VIX usually goes crazy. And that's true. But I don't know if it's a leading indicator, Spencer.
All right. If you want more insights from Jim, more education on trading futures, I do recommend checking out the links in the description of this video. There are a number of links to free resources and webinars that Jim himself hosts for NinjaTrader. And we appreciate his time with us. He joins us every single Monday for a few minutes to hang out and talk about the futures markets. And I guess that's that. So, Jim, it'll be another interesting week, especially when you've got two competing macro storylines at the same time. And you've been pretty consistent for the last, how far back now? Maybe last month, maybe more in the bear camp. I wonder if anything will happen this week to change that, but I guess we'll have to find out next Monday. Jim Cagnina, Senior Education and Trading Specialist for the NinjaTrader platform. Guys, smash the like button for Jim. I appreciate you hanging out with me, man, and good luck today. Do you have any trades on, by the way? We didn't even get to that. Do you have any trades on or any?
No. So right now I'm waiting for a pullback in the NASDAQ.
Okay.
And I want to start accumulating kind of a mid-tier position between the point of control and the bottom of the value area, not to complicate everybody, but 252 all the way down to 197.
That's in the micro NASDAQ.
Yeah. I think that's the strongest stock index today, and I think we have just like those ants in that rubber tree plant, man. We have high hopes for the NASDAQ today.
Yeah. So 14,252 and 14,197 are your key levels right now.
Yep.
And I see you have a buy order out there.
And then when we're done, I'll probably drill in, focus a little better, and throw a couple more in so we can scale into a position.
Nice. All right, Jim, we'll talk to you again next week. Good luck getting those trades. Stay green out there.
All right, man. Thanks, Spencer.
All right.
You take care.
All right, I'm going to hop off as well. We got Benzinga live starting in about 25 minutes with myself and Aaron Bree. So I'll see y'all over there. Hit that like button for me. Please remember all the information from our show, from all of our shows, are meant to be used as informational purposes and not for investing or trading advice. That's a wrap for Futures Trading with NinjaTrader. I'll see you guys in a little bit. Stay green out there. It's hard.